I mean, silver's obviously tight in London, but it's also becoming tight in Shanghai. This is a global phenomena. This is not, oh, there's plenty of silver, but it's in the wrong place. No, there's not plenty of silver.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 10th through November 17th, 2025, while supplies last. First this week, 2025 1-ounce silver Canadian maples are just $6.75 over spot. Next, our choice 1-ounce palladium bars are only $199 over spot. Finally, pre-1933 BU $20 Saint Gaudens coins are only $99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. I'm always glad to have this returning guest. Bill Holter is an experienced Wall Street branch manager. He's also an analyst of all markets. He's an experienced professional and bonded bullion dealer. Bill, thanks for coming back on Liberty and Finance today being Wednesday, November 12th, 2025.
Thanks for having me back, Dunagun.
Our viewers and subscribers love to get your perspective on what's going on because you call them like you see them. And right now, there's significant concern on people's parts about this sort of swoon we've seen in the precious metals markets over the past 3 weeks or so, although they are recovering now.
What swoon?
You're saying that if we blink over the last 3 weeks, we're still up 50% plus per the year.
Exactly. But the thing is, Dunagun, we're back to the high levels, not quite on gold, but yes, on silver. But neither silver nor gold are as overbought as they were 3 weeks ago. So they worked off some of the overbought. The paper sales did not work in cash. I mean, yes, they got a short-term pullback, but it didn't work like it had in the past where you get a smash and, you know, it's another month, 2 months, 3 months before those numbers are revisited. I mean, this was amazing that the metals have, you know, they pulled back basically to where they should have on charts, relieved the overbought, and here we are again, not as overbought as we were before. And in silver, well, in both, in gold and silver, you're starting to see some global price insensitivity. They don't care about the price. They want the ounces. And thanks for having me on. I cut your introduction off, so thank you for having me back, Dunagun.
Absolutely, you're always welcome. And you're talking about the dominance of the physical market over the paper market, which has been the opposite for the past several decades. Can you explain that to people?
Yeah, I mean, the paper markets were the tail on the dog, but the tail constantly wagged the dog because they would overwhelm the physical markets with paper. The problem now is they've done it for so long and to such a grand extent that now there's a question whether these paper contracts are going to be able to deliver. And the answer I think you're going to find in the next month to 3 months, we're going to find out that no, the paper markets are not a substitute for real physical because they have to deliver real physical that does not exist to be delivered.
That prospect of metal that isn't there is of significant concern to the highest level of the food chain, central banks, sovereign wealth funds. We've seen repatriation of gold and now silver this year by countries. You could go down the list. And it's also of a concern to ordinary stackers and investors who've been trying to protect themselves from destruction of their financial health of their family, of their situation, both currently and going forward. Can you talk to us about why this little bit quiet rush to physical has been so important at every stage of the food chain?
Well, yeah, the market is, the bottom line is all of the futures, options, paper products, etc., they're all based off of the physical metal in the first place anyway. That's why they're called derivatives. They're derivatives of the actual product. There's not as much concern. There's concern. I mean, if gold were to go, if gold doesn't deliver, the system dies anyway. But if gold doesn't deliver, it's not a direct effect on production, if you will. Silver is used in so many different applications, whether it be industrial, technological, medicinal. I just did an interview and was talking about every time they shoot a Tomahawk missile, there goes a monster box. You can't make a Tomahawk missile without roughly 500 ounces of silver. So silver will have profound ramifications to the real world, to the real economy. Now, that said, if silver goes failure to deliver or gold goes failure to deliver, you're stuck in the casino because the casino will close. And when the casino closes, and we've talked about this, for the last, year and a half, maybe even 2 years, we've talked about the great taking. Once the casino closes and banks and brokers and insurance companies start going belly up, they're going to take your capital with them. And that's why it's so important to get your capital out of the system into something, gold and silver, that cannot bankrupt, and in a place where it can't be taken from you.
We wanted to talk to you about that, about systemic risk, because we've seen over the last several years, perhaps you could argue starting in 2019, some very serious shocks in the systemic banking system and in the financial system and monetary system. There was the repo crisis in September, October of 2019. You can remind us of that. Our friend Rafi Farber has talked to us about the repo facility getting drained dry. We've seen underwater portfolios at the largest banks, even the too big to fail banks, having their bond portfolios and their commercial loan portfolios underwater, so that they'd be insolvent if they had to mark to market like everyone else does. Can you talk to us about even some very recent indications that say that the potential liquidity crisis is a serious Achilles heel, and we need to be very aware of that going forward?
Right. Well, going back to visit the late 2019 episode, that was just before COVID, and the repo rates spiked to 10%, and that the Fed was having to put $100+ billion into that market every single night so it could clear. Then conveniently along came COVID, and two things happened. The real economy worldwide was definitely stunted or shut down, whatever you want to call it. There was less demand for credit because of COVID. And it allowed central banks all over the world to flood the markets with liquidity. Problem solved. Not solved, but the can was kicked down the road. Here we are again. We're nowhere near where we were in October of 2019, but the overnight rates are starting to move higher again. It's a concern and should be watched. Again, everything, whether it be the real economy, production, consumption, transit, and also the financial world, the financial economy, everything runs on credit. If credit gets disrupted or credit ceases anywhere, it'll be a shock that will, it'll shut the whole system down.
In the face of those systemic risks, many people have turned to, and increasingly, it's interesting, our viewers and yours have been for a decade or more turning to real assets such as commodities, and particularly gold, silver, as premier among those to preserve and protect their wealth. There's just recently been remarkable announcements from the high pulpits of the financial, the major banks and others on bond experts and so on, saying, the traditional 60-40 portfolio isn't what you should have anymore. It should be 60-20-20 or 25-25-25-25, or you should take half your bonds and put them into gold. These are people who have been turning their backs on gold officially for decades. Can you talk to us about this pivot, this strange emergence from the highest levels, almost seeming to be in a "don't say I didn't tell you so" moment after decades of not telling people to do so?
Yeah, I would just say welcome to the party. And next, I would say we have interest rates still at basically generational lows. I mean, we're not where we were 3 or 4 years ago. We're not at 0% rates, but rates are extremely low. There's no risk premium in interest rates at all. So brokers and banks, they understand that the likelihood long term, 5 years, 10 years, longer than that, the likelihood is that rates are going to go higher, not lower. And they also understand that there's going to have to be another mass printing, whether they call it QE or not, it doesn't matter. But there's going to be another global mass printing. And the problem with that is that debases the currencies, and that lowers the value of the unbacked currencies. If the values are lower, then you got to give more of dollars or euros or yen or whatever for that same ounce of gold or the same ounce of silver. So I think they're looking at it pragmatically and saying, yeah, the day of buying and holding bonds is over, and that's why they're recommending half of that bond position be liquidated and put into gold. The only problem with that is if everybody did that, you'd have gold at probably, who knows, $2 million an ounce. Just, pick a number, but it's going to be super, super high.
We got some questions that have been submitted by viewers ahead of your arrival. One of them revolves around concerns that as the public is waking up, so emerge from the woodwork, basically swindlers who would love to take good moms and pops hard-earned money away from them, separate the so-called inexperienced people from their money. Genuine versus fake gold and silver. Any tips from you on, first of all, how real this risk is likely to be moving forward? And then secondly, what best products or acquisition channels people should use to avoid the risk of fake gold and silver? So could you first start with how real you believe the risk will either is or will become as more and more people are waking up to the need to own gold and silver, and if there's not enough real stuff to go around?
Right. Yeah, there's always some risk. I think the risk will be greater as the prices go higher. And I would simply say either call me or call you. We clear our business through Miles Franklin, and Miles Franklin's been in business over 30 years and never had, they have never delivered a counterfeit coin. As far as I know, has never delivered one counterfeit coin to a customer. And if it was done, it was rectified. But understand that if you go through a reputable broker, their business is done. If they send you a counterfeit gold eagle or gold bar or silver or whatever, if they send counterfeit to you, their business is done, because then their reputation, their word is broken. So I would just say, and do understand that any time metal is shipped out, it's done 100% under camera, and the coins that they receive, other than coins directly from the U.S. Mint, it's my understanding that all coins are assayed and proven to be real when they come in, before they go back out. So if you use a reputable dealer, use us, Miles Franklin, you're going to get the real deal.
Any particular products you can identify that you think will be likely to be the targets of potential forgery attempts because it's easier for the forgers, or the payback is great, the potential payback for them is greater?
Well, I mean, the payback in gold is obviously greater than the payback in silver. So gold is going to be the target. And I would say either generic rounds or bars are going to be the easiest to, they'll be the easiest to counterfeit. I mean, it's more difficult to counterfeit an elaborate coin, but yeah, they can be counterfeited. And that brings me to a topic I want to talk about. In silver, I've been an advocate of junk silver as the best form to own in the United States. Roughly 14 dimes equals an ounce. So you've got 14 transactions. It's the smallest denomination. It's U.S. Mint lineage. It really can't be counterfeited because it's got to show scruffiness. I mean, these were in people's pockets. And we've got an anomaly going on right now where if you're looking to sell junk silver, you're looking at $3.50, $4 under spot. And if you're looking to buy junk silver, you can buy it at spot, maybe 50 cents over spot. It's the cheapest form that you can buy right now. So if you're buying silver, you definitely want to buy junk silver. It's the cheapest and it's the best. And if you're worried because the bid is below spot, and it's well below spot, pretty much everything else is very close to spot or even eagles are above spot, understand what has happened. We finally got back to this $50 level, and we stayed here. We've been here for, call it a month, but we're approaching it. And literally, I'm not going to say the only form or the only way to buy silver in the late 1970s, early 1980s was junk, but that was by far and away the primary form of silver to buy. So what you've seen over the last few months is that many of these people who have held on for 40 plus years have turned seller. And the dealers and the wholesalers got overwhelmed with the selling. So what did they do? They lowered the price. And if they're, call it $4 under spot, that's 8% below spot. And what they're doing is they're sending those coins into refiners to melt them down. And they pick up that 8% is what they're doing. Now, that said, this is a short-term event because the supply is already, the supply of junk being sold is already starting to dry up. And when it does dry up and prices start to normalize, guess what? There's way less junk available that still exists because it's been melted down. And I'm gonna say right here that I think when all is said and done, junk silver is going to become the most expensive form of silver in the United States, even priced higher than eagles. And I say this because I believe the supply is being destroyed on a daily basis. It's being melted down.
Yeah, I can add to that the testimony. I have a couple of clients who actually are at the wholesale level, and they've been communicating with me over the years as the price was trying to get to 30 and try to get through 30, saying, Dunagun, if we can just get it above 30, we've got associates who have hordes and hordes of 90% silver that they can't release unless they can get a significant bid over 30. Can you do that? And we couldn't for the longest time. In fact, one of them was rather a remarkable story. He invented a high-speed machine for visually separating out. So basically mining for the pre-64 or pre-65 dimes, quarters, and half dollars out of truckloads and truckloads of coinage that they'd get from banks. They'd go through at a very high speed and they would segregate out. They'd basically milling through, grams per ton, getting the real 90% silver coinage separated out, and they store it up. He says we can't. So now the market broke through their break-even point, and now they were dishoarding that. So that makes a lot of sense. And then, did you also address the backlog that then occurred at some of these refiners that then currently made it?
Yeah, there's a backlog. I mean, the amount of junk that has been turned in for sale has been huge, and it has backlogged the refiners. This will pass, and when it does pass, I think, like I said, I think junk will end up being the highest priced silver in North America.
And frankly, we saw that close to that during the COVID crunch when we had not only the lockdowns, we had the Ukraine invasion, we had 3 bank failures in the U.S., all of this within a year period of time. And we saw premiums on, demand, retail, ordinary, investor demand on junk silver spike in the relatively flat supply environment. And we saw premiums on that be second only to U.S. American Eagles.
Right. And I think at the peak, American Eagles were $17, $18 over spot, and junk was as high as $13 over spot. And at the time, the premium on bars really didn't move much. I mean, I think 100-ounce bars maybe were $3 over spot. And that's pretty close to where they are now. The bar market has not moved much, but yeah, junk has had the premium has collapsed and gone negative, and I think it's a no-brainer to buy junk silver right here.
Can you talk to us about the predatory practices of some high-profile dealers? We get, not every week, but it's every month for sure, testimonies to us from clients who have the value of their nest egg cut almost in half by unscrupulous, I would call, dealers that follow practices such as forcing and pushing really hard and is upselling them into high-priced collectibles, saying that's what the rich people do, so you got to do it too, to really keep yourself safe from government confiscation and so on. Any particular signs and signals you think that people should be wary of when dealing with dealers that are putting on a certain, what does it look like? How can we judge the tree by its fruit? How can they recognize that when they should probably run away rather than walk away from some of these dealer situations, whether it's with their IRAs or their nest eggs?
Yeah, that's simple. I mean, just look at spot, and if today in this market right now, if you're looking at a high premium, anything over, I don't know, even 5 or 6% for gold eagles, anything over that, you're getting ripped off because the premiums don't exist today. Most products can be purchased within 5% of spot.
For people who are subject to that, they don't understand the difference. Are there any signals, even in the beginning, like you see some very glamorous ads on television or in glossy print that comes in the mail, that sort of thing? Is there anything that will jump right out at you where you look at, you can just tell on the surface, this is one you want to put in the do not follow up on pile?
Well, you got some companies that say, well, if you buy X amount, we'll give you so much silver. I mean, that's like
for free.
Yeah, it's a carrot, whatever. I don't know. This is not really a topic I like to talk about, because if I really talk about it, I'll start swearing and your YouTube will get taken down. So
yeah, it burns my britches too, because we've heard so many sincere, heartbreaking stories from widows, from elderly people, where the wife, is trying to find how to forgive the husband for having gotten duped in. But the thing that hurts doubly is that they already broke from the herd. They finally decide, okay, I think I'm getting the message, and I really believe that staying fully in the market, staying fully in the bank, staying fully in doing whatever my mainstream financial planner, that's down at the strip mall down the street, is telling me to do, is probably not the safest place for my future. So I'm gonna bite the bullet. I'm gonna go into what's unfamiliar territory. I'm gonna go into some gold and silver, and then they buy the Brooklyn Bridge from one of these big name companies that's been around for decades and has maybe high ratings or whatever. That's why it hurts even doubly. They're trying to do the right thing. Any comments on that without swearing too loud?
Yeah, I mean, it's a shame. It's predatory. I mean, I'm not going to name names, but I mean, just as an example, there was someone representing a firm that had pretty good information on YouTube. Not all of it was correct, but it was mostly correct and pretty good. And you're taking grandmotherly advice, and that was a firm that was charging whatever the fair rate was. They were charging 26% commission on top of that. So what is that? Is that gouging? Is it stealing? It's horrible. And it gives a bad name to this industry. And it's not illegal. It's not illegal because it's not a regulated industry. But I'm pretty sure, when you're standing at the gates of heaven, it's illegal. That's a black mark.
Yeah, and some we've had to. We were going to have a debate on our platform between another company and the one that I'm quite sure you're talking about, and the one I believe you're talking about pulled out a day of and said, yeah, we're not going to show up because we don't want to give the publicity to this company that's would be talking against our position on this. So it's unfortunate we never were able to have that debate in the public eye. I think that it's important to shine light on this. One of the things Andy, the CEO of Miles Franklin, has talked about is that if any company is trying to push products to you that you can't shop, that you can't go get a comparison pricing on by looking at other dealers, that's a clue. Yeah, if they're giving you some ounce and a quarter from St. Helen, whatever country, coins, rather than just something that's the vanilla main bread and butter, straight up investment grade bullion coins from one of the top 6 mints in the free world, you probably are getting led into the dark part of the woods where you can't see the sun shining. And that's one of the things you're talking about is for people who really aren't educated, try to stay in the brightly lit areas where you're getting just the vanilla standard issued things and not upselling and upcharging for something that's considered, oh, this is really special, so you need to get this because it's better than what everybody else is getting. Any other things that you're watching currently? You mentioned the liquidity, the potential for short-term liquidity crisis in the debt markets. Anything else that you're watching on an ongoing basis to keep your clients ahead of the curve?
I'm watching silver in particular, COMEX silver. Also, we're seeing now that silver's obviously tight in London, but it's also becoming tight in Shanghai. This is a global phenomenon. This is not, oh, there's plenty of silver, but it's in the wrong place. No, there's not plenty of silver. And what I'm watching as far as COMEX is concerned, November is strictly a non-delivery month. And the amount of contracts being added on a daily basis for November delivery is astounding. December, on the other hand, is a big delivery month. And I question, can they deliver 60, 70, 100 million ounces for the month of December? I don't know. It just looks to me like the failure to deliver, we're walking on a knife's edge at this point.
Bill, for people who want to follow your analysis and the things that you're watching more closely than your visits here, we're grateful always when you're able to come here. How should they follow you more closely?
Yeah, just go to billholter.com. You can contact me through the site, or you can contact me through my business email. It's BHOLTER@proton.me. And I do want to remind people, if you go to my website, absolutely go to Grizzly's Corner. It's an icon up top. There is just unbelievable prepping information. There's links to products, not products that I get paid for or support, endorse or anything. But these are products that the guy who wrote and has written pretty much everything, and he's a survivalist guy for Grizzly's Corner. These are products that he's used and been happy with the quality of the product. So use that as a resource. If you're trying to prep, if you're trying to get ready for stuff, there's information from soup to nuts on prepping and survival on the website under the icon Grizzly's Corner.
Now you're talking near and dear to the hearts of our viewers who've been here some of them since the beginning when we started in 2013 as reluctant preppers. So preparedness always involves being early rather than late, and you've asked people to do that. In fact, one of the criticisms that gets levied against you in the comments always makes me stop and go, guys, think about this. When people criticize, oh, Bill's been saying this for years and it hasn't happened yet. It's like, would you rather not have had the heads up? Would you rather not have had time to make preparedness? Or are you grateful that you've been educated along the way for free and have the chance to look into this for yourself and decide if you'd like to take some preventative action and had time to do that? Because after it becomes obvious, when it becomes like, okay, it's going to happen tomorrow or next week, do you really think they're going to be able to get the things, the skills, the relationships, the networking, the assets that you need to make it through rather than having them in times of relative calm?
Dunagun, it's been a slow boil, and you're watching the things I talked about years ago come to fruition, on a daily basis. And that being said, if I was wrong about everything, If I was wrong about everything except buy gold, buy silver, and I'll remind you, when I retired from the brokerage industry, I had one of the largest retail gold, silver, and mining share positions for customers in the country. I will just say, if I was wrong about everything, but you bought gold and you bought silver in the year 2000, you did better than anybody else on the planet. So my apologies.
Bill, we're always grateful for your presence here, and look forward to our next chat together on Liberty and Finance. With your help, I'm more confident than if we didn't have you here that we'll get through this together. And everybody, thanks for being here. Thanks for watching, Bill, and for cheering. And don't hesitate to add comments in here. Your Grizzly's Corner suggestion is a great one. That's on Bill's website at billholter.com. So, Bill, just as always, thanks for joining us on Liberty and Finance.
Thank you, Dunagun.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 10th through November 17th, 2025, while supplies last. First this week, 2025 1-ounce silver Canadian maples are just $6.75 over spot. Next, our choice 1-ounce palladium bars are only $199 over spot. Finally, pre-1933 BU $20 Saint Gaudens coins are only $99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.